What is up, guys? Dan the Trading Man. Going to be going over the trade I took yesterday in Nadex, and we'll see how we got there. So basically, I'm going to go out just to a very long time frame here. This is a max month. This is all of the years in the S&P, and each candle represents a month. And you can see here if we go from the lows to the highs, we tag some 50% levels. Those run to their targets. So what I was trying to do this entire week really was find 50% setups, and this was one from 2016 to the highs of 2018, right before that 2019 correction. And you can see we fell into this and we rallied higher. Now, what just happened is this low from December to the high just recently, that has come into its 50% level. This low is 28.53, and the 50% is 28.57. So that level held pretty well when we tagged it. That was February 28th. And then we ran right into the high to low 50% short. Okay, and we knew this was going to be resistance because you had this huge move lower, and just because you took out prior swing lows here, you have higher lows, higher highs, higher lows, higher highs. When you take those out, you're going to have a move to the downside when you pull back up, and so that's exactly what happened. We tagged this 50% short, and so far have rallied lower from it. Now going to the hourly chart to kind of digest this more, the high to lows here, right? And on Tuesday around 10 a.m., the Fed announced rate cuts, and we ran right into 31.25s, and then we ran lower. When we ran lower, we actually pulled right into a low to high 50% setup in the S&P. Now the next day we moved higher, and things were looking, not great, but not worse, and we started to move higher. When we retested this 50% at 31.25, the market the market had a great reaction to the downside. It decided, this is going to go back down. And so what I was looking for on Thursday was just a setup to put me into the trend to the downside. What's the first setup I could take to get me to the trend in the downside? And major resistance is this 50%, major support is this 50%. So we're kind of, as of now, in this range. And until we break higher or break lower, which by the way, this target is right at that spot, I don't think we're going to really have a huge move to one direction until we can break above either the 3190s or break below the 2730s or 20s. So on the hourly chart here, again, high to low setup, I decided to look for the next setup that I possibly could. And that was this high to low 50%. And so I wanted to trade futures on this, I really did, but I had something going on, so I could not trade futures because I like to watch my trades when I'm in futures, okay? So I unfortunately could not trade futures for this because I had something else that I had to be doing. But what I could do was go on Nadex, and they have something called a touch bracket, okay? So the touch brackets are really interesting because for the S&P, they're 50 points wide, okay? So let me show you what I mean by this. If we go to Nadex, and this is the live account, okay, you can tell because this is blue and the demo is green. If we go to the touch brackets down here in indices, okay, go to the US 500, and you see we have different brackets here, and they're all 50 points wide, okay, 35 to 85, 25 to 75, they're all 50 points wide. And for Nadex, every point in the S&P, if we go from 29.25 to 29.26, every point in the S&P on Nadex is worth $10. Okay, so the entire contract value is $500 because it's 50 points wide at $10 per point. 50 times 10 is 500. Now there's a floor and a ceiling, right? So let's say that I wanted to sell this contract, 29.25 to 29.75. Well, since there's a ceiling, it kind of has a stop for me, right? So if I enter here, and the highest it can go is 75, and I enter at, let's say, 72, my max loss is 30 because 75 minus 72 is 3. 3 times 10 is 30. My max loss is 30. The most I can make is 470 because 72, okay, minus 25 is going to be 47 points away, and 47 times 10 is $470. So these brackets are absolutely insane if you know how to use them right, okay, because you can risk very little to make a lot. And so as I was saying, I had something going on. I could not trade futures because I like to manage my trades. So what I decided to do was set up a limit order. So you can see here, I had a order sent at 9:38. Okay, 9:38, I had an order sent. Only one contract, guys. It was only one contract, and 30, 80, half. And you can see the bracket is 35 to 85, just like this one, 35 to 85. So what does that mean? Well, my order price is 30, 80, half, and I'm selling one, and the ceiling is 30, 85. So the highest we can go is 30, 85 in this contract. I'm getting in at 30, 80, half. So if we take 30, 85 minus 30, 80.5, you'll see that's 4.5. Now multiply that by 10, you can see our risk is $45. Okay, our risk is $45. That's it, $45. So I place my trade, place my order for it, okay? And I eventually get filled at 11:27 at 30.80 half. All right, and that's 11:27. This here is 11 o'clock. If you go to a 1 minute chart, or 3 minute, whatever, I'm sure we would see at that time us get filled here. And so let's see, we tag this at 11:27, and just like it makes sense, 11:27 I was filled, 30.80 half. Okay, so I actually wasn't watching this. I didn't know I was in the trade. I was, like I said, I was busy. I had something else going on. So then, I check back at like 12:09 p.m. and I'm not, and you can see I'm on my iPhone. Like I made the order on my web, right? So I'm on the internet doing this trade, knowing what I want to do. I have my screens in front of me, everything's good. Here though, because I don't have my charts in front of me, I don't really know exactly what's going on. And I see that I'm up over $300. My immediate plan is, let's sell this, because I did zero work. I put an order in at 9:38. At 11:27 I was filled. Now it's 42 minutes later. 42 minutes later, and I'm up over $300 off of $45 risk. And so the max I can make, by the way, in this contract, let's just go to this guy right here, because this is actually the trade that I took, right? So we can put in, well, this is actually 100 points off, but we could put 2980.5, and you'll see that my risk is 45. My max profit is $455. That's the most I could have made. Okay, that was this contract here. My risk was 45 to make 455. Now, instead of trying to hold for all of that, like I said, I was on my iPhone. I just pulled up. I saw how much I was up, and I figured, hey, I risked $45 for this. I only have one contract. So, if I had two, I could take one off and try to just let the other one hit its max profit here. But because I had one, I decided to sell. And so I sold. Remember, our risk is $45. I sold at 30.45.30. So 30.80 half minus 30.45.3 is 35.2. Multiply that by 100, by 10. $352 in profit. $352 in profit. In profit. Okay? In profit. Now, divide that by our risk of 45. 782%. I actually thought it was less than that. Let me do that math one more time, just really quick. So 30.45.3, 30.80.5 times 10, 352. 52 divided by 45. 782%. So that was a really, really good trade for what I did. Now, I want to go over the mechanics of the brackets so you understand how they work. They expire every Friday when the market closes. So these are weekly contracts. But because of the range, because of the volatility that we see on the chart, we usually don't move this much in a day. I hope everybody understands that. This is not an average day in the market. There's a lot going on right now. So normally these expire on Fridays, but they also expire when the floor or the ceiling gets hit. So immediately, because this trade did go all the way down to its target, 3008, okay? So this contract would have touched the floor at 30.35. And when it did that, it would close, and you would immediately be paid for that. Instead of waiting until, you can see here, it says 4:15 p.m. This is for Friday, 4:15 p.m. Expiry is March 6th. Today is the 6th, 4:15 p.m. Market close on Friday, these expire. But when you touch the floor or when you touch the ceiling, it automatically closes, and you're paid for that. So that's why these touch brackets are amazing, because you don't have to hold the entire week. You can cut losses, take profits at any time, And on top of that, instead of having to wait like a binary for the contract to expire, if it touches the floor or touches the ceiling, you immediately are paid for taking that trade instead of having to wait for a time expiration, although they do have both. Okay, so that's why the touch brackets are really, really cool. And also, only using one contract, this just proves that you don't need a lot of money to start trading. That's all bullshit. Okay, $45 is all I risk on this trade. $45. 30.80 half. Boom. We fell very low. I risk $45 for this, guys. That's it. So, going into the trade setup again, there was a major resistance level, right? We talked about that on the hourly chart. Hourly chart is a high to low, 50% short. We in a way double top this, and then when we start breaking lower, I look for the high to low, 30.80 half, enter there, and then when I got out of what I was doing, I was on my phone, saw how much I was up, knew how much I risked, and I said, let's close this and take what we got, and that's exactly what I did. You can see immediately I placed the order at 12.09, I was filled at 12.09, whereas before I was on the web and I just kind of placed orders on how I thought it would be. So that's kind of it. That's the trade I took. So hopefully this helps in some way, and if you have questions or comments, let me know.